This morning, Ansell came out with a profit warning, forecasting a big drop in FY24 earnings as it cuts production and staff in response to customers working through high levels of product stockpiled during the pandemic. This as it plans to slow production of finished goods to normalise inventory holdings, which it said would improve cash flow but hit earnings. Okay, Rudi, is this a case in point?
Yes. In particular, also for the US, Morgan Stanley is making a big thing about that. A large number of companies in the US is sitting on basically much too high inventories for this part of the cycle. If that happens and you get into an economy that is slowing down, you can see how bad news can quickly form. We haven't had any such warnings yet in Australia, but Ansell is very timely now. I'm in continuing on the conversation we had earlier, I'm very cautious with the reporting season.
Right.
Both the reporting seasons we had, August and February, were not good. They were not good for share prices either. The number that always has stayed with me is that out of February, 49% of all the companies that reported in February needed a very strong second half to compensate for the disappointing first half.
Right.
And that might be too much of a call, given the slowdowns, the continued interest rate hikes, finally the mortgage cliff happening and impacting on consumer spending. So I'm a little bit surprised that we haven't seen more profit warnings so far. We have seen the return of confession season, which is something new, but in all honesty, it hasn't been as bad as it could have been, which I suspect we will get more Ansells in August.
Okay.
Because if you look at the detail, this year is okay.
Yeah.
Ansell is meeting expectations for this year.
Yeah.
It's next year that's the problem.
Yeah.
And I think that's the problem in August as well.
Okay. So what would you be doing, Ansell's share, if you're an existing shareholder?
It's a bit of a hybrid here. A little bit over 50% is healthcare and the rest is basically industrial, including energy sector and stuff. I actually think I would be more cautious. I wouldn't jump on board. If I own the stock, I probably would stay the course. You sell after it comes down. It's probably the same level as it was about a year ago, maybe a little bit further. But I wouldn't jump on it. I think there's still potential for. The problem with a company like Ansell is it's a manufacturer. The second thing is it does have lots of competitors in at times vital segments of its business. That's something it can't control. Inventories are a big problem. For me, the uncertainty is too high. I would, at best, a hold.
Philip?
The gloves are off. I was trying to think of the pun. It would have been better if they didn't change their strategy, but the gloves are off. Look, I'm going to call it a hold. This is the reverse of a reopening trade, and it is a manufacturer. We've seen some parts of retail. We saw it with sanitizer. There's all this demand for their products during COVID. Their customers ordered more than they needed because of inventory supply issues and because of just using more of the product. With a bit of hindsight, a lot of their customers are just holding too much and their products don't really have a use-by date, so they can sit in the warehouse for quite a while. And they flagged a cautious FY24. As Rudi was saying, they supply hospitals. We keep waiting for the medical sector to return back to pre-COVID levels of visits. People don't want to go to the doctor. They just don't. I've seen it in other parts of the healthcare space where customers aren't returning like they used to. They'll go if they have to. If I don't have to, I'm going to wait because I might get sick. I might get COVID if I go to hospital. So their near-term outlook until the destocking occurs, it's probably uncertain. Having said that, it's a lot of negativity in the share price. It's almost a 12-month low. It is a good long-term buy. To quote Warren Buffett, low price point, replenishable goods. It is classic. It's a company all people should look at some stage because the stuff wears out. You've got to buy new stuff every year, every month. Just right now, when a company puts out that sort of trading update, it's not going to outperform anytime soon. No. I wouldn't throw it out with the bathwater. I would call it a hold. But clearly, you'll see a whole bunch of analyst downgrades overnight. It'll struggle for the next foreseeable future. Okay. Won't be alone, but I'll call it a hold just because it's actually quite cheap at the moment.
Okay. All right.